Last week in the markets was an absolute roller coaster. I mean, we saw this massive reversal that just wiped out trillions, sent the fear gauges screaming, and honestly left most traders completely blindsided. But not everyone.
That right there, that's Phil Davis, the founder of philstockworld.com, and he's talking about a day that saw the Nasdaq swing from being up 2% to down over 2%. A day where a company like Nvidia could absolutely crush its earnings and still fall flat. It was a total confidence breaker, a liquidity shock that sent this huge wave of panic just everywhere.
And look, this wasn't just some minor dip. This was a $2 trillion reversal. The CNN Fear and Greed Index, just a few weeks ago, it was sitting pretty in greed. Well, it completely collapsed into the single digits. That, my friends, is textbook extreme fear.
So that brings us to the big question, right? While pretty much the entire market was just reacting in a total panic, how was this one community so prepared? How did they literally have a map for all this chaos before it even happened? Well, that's what we're going to break down right now by looking at the exact analysis the philstockworld.com community used to navigate this thing.
Okay, so how'd they do it? Well, it all starts with their roadmap. They have this proprietary tool that basically turns all that market chaos into a clear, predictable path. And this is it. It's called the 5% rule. And you can forget about reading tea leaves or any of that chart voodoo. This is a straight-up mathematical framework that they use to identify the key levels where a stock or an index is likely to bounce or fail or just completely reverse course. It's the absolute foundation of their entire market map. And you have to check this out. You can see the map playing out perfectly. Weeks in advance, the community was warned about this air pocket, and they were given the key levels for the Nasdaq ETF, the QQQ. A top at 630, a failure zone between 618 and 624, and a bottom target of 600. So what happened? The price followed that map almost tick for tick. Members didn't have to guess, they had the levels, they had the context, and most importantly, they had time.
So what's the secret here? Well, Phil Davis, and this is a guy who's trained top hedge fund managers and is one of Seeking Alpha's most read analysts. He's actually a huge skeptic of traditional technical analysis. He famously calls it astrology for men. But here's the brilliant part. He uses its principles as a fundamental factor. Why? Because if 95% of traders and all their algorithms are reacting to those exact same lines on a chart, well, their behavior becomes a predictable force. So it's not about believing in the lines, it's about understanding how the crowd is going to react to them. So once you have that market map in hand, the real magic starts to happen in the live member chat. This is where the analysis turns into this incredible education. Let's see how they put that theory into practice.
So, a member asked this fantastic real-world question. To protect your positions, why not just use a simple options collar? You sell a call and you buy a put to limit your risk. I mean, it seems like the safest, most logical move, right?
And the answer, which just perfectly illustrates the site's unique advantage, comes from Warren 2.0, the community's resident AI analyst. And he does not pull any punches. A collar, he says, is a retail strategy that just kills your flexibility and completely locks in mediocre returns. Sure, it's safe, but it's the exact opposite of what this community is trying to do.
And here's the crucial point. The PSW method is all about being the house, not the gambler. They sell premium. They don't buy it. A collar forces you to buy an expensive put. Rolling, on the other hand, lets you use volatility as fuel. So when a stock drops, you can roll your options down and out, collecting more cash, lowering your break-even, and turning a potential disaster into a manageable and often profitable position. It's an active strategy that keeps your power and your income machine intact.
Now this is exactly the kind of market wisdom you'd expect from a community led by an expert who's recognized by places like Forbes and CNBC. But, theory is one thing. How does it actually translate into real trades on a day when the market is totally falling apart?
So, mid-morning, the Nasdaq hits these disastrous levels. Panic is setting in. For most people, this is the time to sell everything and just run for the hills. But for Phil, it's a time to execute a very precise, very powerful defensive play. And this is the play. It's a hedge using SQQQ, which is an ETF that goes up when the Nasdaq goes down. So he builds this massive $250,000 hedge that's already deep in the money. And here's the genius part. He immediately starts selling other options against it, generating $20,000 of pure income right away. The hedge starts paying for itself from day one.
But it's not just about playing defense. True to their strategy, even as the market is basically on fire, the community is out there hunting for value. looking for great companies that are being unfairly punished by all the panic.
And they find one in Comcast, or CMCSA. Phil calls it stupidly cheap. So why? The market is punishing legacy media, but it's totally ignoring these massive, high-profit catalysts, like the Wicked movie franchise and its tie-in with the Sphere in Las Vegas. At a PE ratio of just 4.46, with a great dividend, it's a deep value play hiding in plain sight. It's a perfect example of looking for value when everybody else is blinded by fear.
Now that kind of sharp analysis, finding hidden gems like Comcast, isn't just coming from Phil. You've actually heard from him already, but Warren 2.0 is part of a bigger team, a whole suite of advanced analytical tools that power the community's insights.
Meet the AGI Roundtable. You've got Warren, the sharp-witted strategist. Then there's Bodie McBoatface, the deep-diving researcher, and Zephyr, the synthesizer who pulls it all together. And this isn't just standard AI. Two of these are AGI, or Artificial General Intelligence, which means they're capable of much deeper synthesis and reasoning. It's a whole team of advanced tools working right alongside members every single day.
Just when the day seemed completely lost, the market did what it does best. It flipped. Hard.
So in the afternoon, the Dow suddenly rockets up over 700 points. The Russell 2000 soars almost 3%. It was just this massive, algorithm-fueled relief rally that was sparked by a single dovish comment from a Fed president, which caused programmed buying to replace programmed selling in an instant.
And this is the real payoff. While everybody else was out there celebrating, the PSW community was just looking at their map. And that massive, euphoric rally, it slammed to a halt and got rejected right at the 606 week bounce level that was predicted by the 5% rule. The system wasn't fooled. The rally was just noise, and that underlying warning sign, it remains firmly in place.
This chart really puts it all in perspective. I mean, yeah, Friday had that nice little bounce, but for the week, the S&P was still down 2% and the Nasdaq was down nearly 3%. It was a brutal week, and Friday's pop was really just a little relief after a major shock to the system.
So what does all this chaos really mean for you? Especially heading into a holiday week, which, as you know, is notorious for low volume and super high volatility.
The market just showed us exactly how quickly it can flip and just how fragile the whole system is. So you got to ask yourself, the next time the market gives you whiplash, and believe me, it will, do you want to be a passenger just along for the ride, or do you want to be the one holding the map? For the kind of guidance that prepares you for days just like this one, philstockworld.com is an essential place to be for anyone who's serious about the markets.